Is the fastest growing telecom company in the Philippines? Actually, the most financially at risk. Good day, stakeholders. We are Kongkong Consultancy, and today we will be presenting our external analysis of the Philippine telecommunications industry with a strategic focus on Dito Telecommunity, Globe Telecom, and PLDT. This report aims to provide a clear data-driven assessment of the competitive landscape, financial performance, industry forces, and future outlook of the telecom sector. As consultants, our role is not just to present data but to interpret what it means for strategy, risk, and long-term sustainability. Let's begin by understanding the competitive environment shaping this industry.
The telecom industry is shaped by 5 strong competitive forces, all of which create a challenging environment for firms. First, the threat of new entrants is low due to extremely high capital requirements and strict government regulations, including infrastructure and licensing requirements. Second, supplier power is high since telecom companies rely on a limited number of global providers such as Huawei, Ericsson, and ZTE, giving suppliers strong control over pricing. Third, buyer power is moderate to high, driven by price-sensitive Filipino consumers, low switching cost through prepaid SIMs and multiple competing brands like Smart, TNT, TM, and Gomo. Fourth, the threat of substitute is moderate, with technologies like satellite internet or Starlink offering alternatives, although high initial costs limit widespread adoption. Finally, competitive rivalry is very high as the market is saturated, dominated by Globe and PLDT, and characterized by frequent price wars, promos, and aggressive competition for market share. So overall, the industry is high risk, capital intensive, and highly competitive. Looking at the external environment, the telecom industry is influenced by multiple macro-level factors. Politically, government regulations and national security policies heavily impact operations, including potential restrictions on telecom equipment and strict licensing requirements. Economically, the industry is growing at around a 4.1% compound annual growth rate. But it is already maturing, meaning companies must compete for market share rather than rely on new demand. Socially, there is strong demand among Filipinos for fast, reliable, and affordable internet, creating pressure on companies to balance performance and pricing. Technologically, advancements such as 5G, AI, and satellite-to-cell connectivity are transforming the industry and increasing competition. Legally, slow and complex permit processes, sometimes taking up to 8 months per cell site, delay infrastructure expansion. Environmentally, frequent natural disasters, such as over 20 annual typhoons, increase maintenance costs and require stronger infrastructure. Overall, these factors create a high-pressure environment that requires constant adaptation and investment.
To succeed in this industry, companies must focus on 5 key factors. First, financial sustainability, especially managing high capital expenditures. Second, network quality and coverage, which directly impact customer satisfaction. Third, cost efficiency, as data usage rises but revenues remain limited. Fourth, technological innovation, including 5G, AI, and satellite integration. And finally, cybersecurity, as digital threats continue to increase. In today's telecom landscape, success is no longer just about connectivity. It is about integrating technology, finance, and customer experience into one strategy.
The Philippine telecommunications industry has transitioned from a duopoly dominated by Globe and PLDT into a more dynamic triopoly with the entry of Dito Telecommunity. However, competition is extremely intense because the market is already highly saturated, meaning growth is no longer driven by new users but by capturing market share from competitors, resulting in price wars, promotional offers, and continuous service improvements. Let us now examine the financial performance of Dito, Globe, and PLDT because this is where the real story behind growth and risk becomes clear. Starting with revenue trends, PLDT consistently generates the highest revenue across the 3 firms, with steady year-on-year growth indicating strong market dominance and stability. Globe follows with moderate but consistent growth, showing resilience even after a slight decrease around 2020. When we look at revenue by segments, all 3 companies primarily earn from service revenue, such as mobile data and broadband. Dito and Globe both generate around 70% of their revenue from data. PLDT, however, is more diversified, with mobile at 46% and data at 40%, indicating a more balanced revenue mix. Then for their horizontal analysis, Dito shows extremely rapid growth over 3 years, which clearly reflects aggressive market expansion. However, when we look deeper, we see that Dito's costs and expenses are also growing, almost equal to its revenue growth. They are essentially spending as fast as they are earning. In contrast, Globe and PLDT exhibit the stability of mature players, maintaining moderate growth with well-controlled costs. Looking at assets, Dito shows the highest growth at 17%, followed by Globe, while PLDT remains relatively flat, indicating Dito's aggressive expansion. However, this is largely debt-driven as Dito's liabilities grew even faster. Globe shows balanced growth while PLDT remains stable. Looking at vertical analysis, all three companies show a similar structure where non-current assets dominate total assets, indicating heavy investment in long-term infrastructure such as towers, fiber, and 5G networks. On the liabilities side, non-current liabilities are also bigger than current liabilities and equity, meaning the industry relies heavily on long-term debt financing. But we can really see how Dito shows extreme leverage by its outlier. Their total liabilities actually exceed their assets, resulting in a negative equity of 33.52%. Dito's 2024 vertical analysis shows that most of its revenue comes from services, but its costs and sales exceeds total revenue. This results in a significant net loss, indicating ongoing financial strain. In contrast, Globe and PLDT remain profitable, with net income reflecting better cost control and operational efficiency. To clearly see the differences in financial health, let's look at important financial ratios for the telecom industry. For liquidity, Dito shows weak and volatile current and quick ratios, indicating difficulty in meeting short-term obligations, while Globe and PLDT maintain stable and sustainable liquidity levels. For solvency, Dito presents a major concern with negative debt-to-equity ratios and debt ratios above 1, signaling financial distress and heavy dependence on debt financing. Globe and PLDT, on the other hand, maintain balanced leverage, allowing them to fund expansion while staying financially stable. For profitability, Dito consistently records negative net profit margin, EBITDA margin, and return on assets, meaning it is not yet generating returns from its investments, while Globe and PLDT remain profitable and efficient. In terms of activity ratios, Dito shows improvement, particularly in receivables turnover, increasing to 31.69, which indicates better collection efficiency as operations expand. However, PLDT still leads in fixed asset turnover, showing superior utilization of its infrastructure. Finally, looking at cash flows, Dito shows highly volatile investing and financing coverage ratios, often negative, which indicates unstable operating cash flows and continued dependence on external financing. In contrast, Globe and PLDT also show negative coverage ratios, but these are stable and expected as they continuously reinvest in infrastructure. To conclude, while Dito demonstrates strong growth potential, its financial position remains fragile, characterized by high costs, weak liquidity, heavy debt reliance, and unstable cash flows, whereas Globe and PLDT reflect financial stability, efficiency, and sustainability.
To understand how these companies create value, we analyze their value chains. Globe is backed by market leaders, PLDT has agile governance, and Dito is newly built and centralized. Globe has award-winning culture, PLDT offers strong upskilling, and Dito competes for talent via Luna Academy. Globe leads in AI and eSIM, PLDT transforms legacy along 11 data centers, while Dito is still vying for 5G standalone with no internal R&D. Globe has broad suppliers, PLDT is the largest buyer but has bottlenecks, while Dito heavily relies on China-based suppliers. Globe covers 97% plus Starlink, PLDT has the most fiber, and Dito builds its own towers. Globe unifies brands, PLDT leads in submarine and fiber, and Dito focuses on SIM-based operations. Globe wants a lean retail footprint, PLDT keeps physical hubs, while Dito is still expanding. Both Globe and Dito offer external deals, while PLDT only offers own brand deals. Both Globe and Dito use their apps as service hubs, while PLDT still leans towards hotlines.
Each company is pursuing a distinct strategic direction. Dito is currently focused on rapid market penetration, offering low-cost, high-data plans to attract price-sensitive consumers. However, this comes at the expense of profitability, as the company continues to invest heavily in infrastructure. Globe, in contrast, is pursuing a balanced strategy, combining digital ecosystem expansion with financial discipline. It continues to grow while maintaining stable margins. PLDT is taking a more conservative approach by focusing on cost efficiency, debt reduction, and profitability improvement. Rather than chasing aggressive growth, PLDT is prioritizing maximizing returns from its existing infrastructure. In summary, Dito is growth-driven, Globe is balanced, and PLDT is profit-focused.
To better understand how each company sustains its competitive position, we apply the VRIO framework, evaluating whether their resources are valuable, rare, immutable, and organized. Starting with Globe Telecom, its GCash ecosystem receives a full check across all four dimensions: valuable, rare, difficult to imitate, and well organized. This means GCash provides a sustained competitive advantage, as it not only generates revenue but also creates a strong digital ecosystem that competitors cannot easily replicate. In contrast, Globe's network coverage and Globe One application are marked as valuable and organized but not rare nor immutable. This means competitors can offer similar services, resulting only in competitive parity rather than a true advantage. Moving to PLDT, its extensive fiber infrastructure, submarine cable participation, and data centers are valuable, rare, and somewhat difficult to imitate but not fully organized to maximize long-term advantage. Because of these resources provide only a temporary competitive advantage, meaning that they are strong today but can eventually be matched by competitors over time. Additionally, PLDT's nationwide coverage also falls under competitive parity, as Globe offers similar levels of reach. Overall, the VRIO analysis shows that while both Globe and PLDT have strong assets, most of these are no longer unique in the industry. The key insight is that sustainable advantage in telecom is no longer driven by infrastructure alone, but by ecosystems, innovation, and the ability to integrate services that competitors cannot easily replicate.
Based on our analysis, Dito shows strong growth potential but still faces major challenges. Its revenue is increasing due to expansion, but high costs keep it unprofitable. It also has weak liquidity and relies heavily on external financing, which increases risk. Operationally, it's improving but still less efficient than Globe and PLDT. Globe is stable and consistently profitable, reflecting its mature position. However, growth is lower due to market saturation, and rising costs from network and digital investments affect margins. It maintains balanced liquidity and efficient operations supported by a strong digital ecosystem, but remains in a middle ground competitive position. Lastly, PLDT. PLDT is the most stable and efficient. It has highest revenue and consistent profitability, but slower growth. While its cash flow is stable, it carries higher debt. Operationally, it maximizes its asset well, but slower innovation due to legacy systems is a limitation.
In terms of opportunities and threats, the telecom industry presents both strong growth potential and significant risk. Starting with opportunities, the Konektadong Pinoy Act enables open access, allowing more players and improving competition. There is also strong potential in satellite-to-cell connectivity, which enables coverage in remote areas without traditional infrastructure. Additionally, the growth of fintech and digital ecosystems, such as mobile payments and digital banking, creates new revenue streams beyond traditional telecom services. The government's 5.6 trillion National Digital Connectivity Plan also drives massive infrastructure expansion and industry growth. However, these opportunities are matched by major threats. The industry faces high capital expenditure requirements, especially for 5G and network upgrades.
There is also a revenue challenge where data usage has increased significantly, but average revenue per user remains stagnant at around 126. Cybersecurity threats are increasing, particularly with AI-driven attacks such as phishing and voice cloning. Operationally, companies face right-of-way issues, regulatory delays, and land acquisition challenges. Lastly, environmental risk such as frequent typhoons, increased infrastructure costs, and disruptions. The key takeaway is that while the industry is expanding, companies must carefully manage both financial and operational risk. Our strategic group maps show how DITO, Globe, and PLDT compete across different dimensions. In terms of speed and price, DITO is positioned as a high-speed, low-to-mid price provider, making it the value leader with the highest data allocation per peso. PLDT, on the other hand, operates at high performance but higher pricing, reflecting its premium infrastructure and reliability. Globe is positioned in the middle, offering balanced performance and pricing, supported by bundled services and digital platforms. In coverage versus value, Globe leads in nationwide coverage, followed closely by PLDT, while D2 offers higher value but still has more limited coverage as it continues to expand. In terms of innovation and reliability, D2 stands out due to its modern cloud-based 4G and 5G infrastructure, making it highly innovative. PLDT is the most reliable due to its extensive infrastructure, but it is less agile because of legacy systems. Globe combines strong innovation with digital ecosystem leadership, particularly through platforms like GCash. Overall, each company competes on different strengths: DITO on value and innovation, PLDT on reliability and infrastructure, and Globe on balance and ecosystem integration.
So the question remains, can DITO sustain its aggressive growth long enough to become a true market leader? Our analysis shows three distinct positions: DITO as the high-growth challenger, Globe as the balanced ecosystem leader, and PLDT as the stable infrastructure giant. As consultants, we can clearly see that the future of the telecom industry will be determined by companies that can balance innovation, scale, and financial discipline.